It's MrConectr. Let's do the market intel report today, August 1st, 2026. Of course, in the geopolitical and macroeconomics, we've got the U.S.-Iranian war. We've got that's overpowering all the risk assets. We've got the insurance entities that are accepting Bitcoin and other digital assets to get through the strait. Of course, the Treasury Department is keeping an eye on those sanctions, on those wallets. Brent oil sits around $80 to $90. We got the Federal Reserve held the funds rate at 3.5 to 3.75%. They had a 9-3 vote, 3 dissents. It's the sharpest split in that type in decades. Kevin Warsh framed that there's no soft inflation target. The Treasury chatter was about possible yen intervention. And this added another macro cross current for the dollar and risk positioning. Key takeaway: oil premium plus hawkish hold still set the weather more than any other single crypto headline. Monitor the Hormuz transit and oil band, next inflation prints, and whether hike descent tones harden further. General crypto market. We got Bitcoin sitting at 63,000. We've got XRP at $1.06. Solana at $73. Major range bound and lagging the equity bounce. Spot Bitcoin ETFs. There's inflows and outflows. There's a lot of trading going on there. They're getting in and out daily. So these hedge firms and these big investment companies are playing the game in and out. Let's see, the Ether ETF season is about $9.0 million net inflow yesterday. While the Bitcoin had about $265.4 million net outflows. We had inflows the day before yesterday, though. July closed with Bitcoin still green on the month after every early month base near the high 50,000s. But options position skews defense into August, and the one-day ETF green print from day before yesterday did not stick. Strategy's large second quarter accounting loss on Bitcoin below cost basis and the cold card seed generation drain. That was this week earlier. Hundreds of wallets, hundreds of Bitcoin remain fresh trust and treasury overhangs. Self-custody hygiene and corporate NAV optics not ledger faults. So the chains are still strong, but the hardware, there's the other vulnerabilities. Trust your hardware, we know what you're getting into. Cold card. Yeah, I haven't even heard of cold card, but we will keep our crypto as safe as we can out there. Stellar push Q2 webinar plus Stellar House in Sao Paulo. It was about privacy and tokenization. Traditional finance and crypto convergence. We had Circle revealed that they received a New York limited purpose trust charter days after Federal National Trust Bank approval. This is a dual state plus federal footing for the USDC custody and fiduciary services without staking, without deposit taking or lending like a commercial bank. So no deposits and no lending. Tether reported about $1.5 billion second quarter net operating profit. So the Bitcoin going down, Tether's printing a profit. Taking all of that money from the, they sell you Tethers, you give them money, they go buy T-bills with it so they can make the yield and not you. All right. Coinbase's weak quarter keeps Wall Street split on recovery timing. Trading revenue soft while stablecoin and adjacent lines are both the story catalyst debate. Bybit expanded into tokenized Nvidia, Apple, Tesla, and other U.S. equity names as loan collateral, another live bridge where tokenized stocks meet margin plumbing, not just market slides. Regulatory developments. Clarity market structure path remains stalled into the August congressional recess window. Crowd odds Clarity Act is signed into law into 2026 rose to about 30%. It was 27 just the other day. So even though the gap is getting what are we at? Friday is the recess. So we've got 1 week. Good luck getting that passed in a week. Maybe there'll be a special session. Maybe they'll extend it. Who knows? Industry leaders still urge a floor vote, though. The leadership calendar risk dominates. Keep your eye on the calendar. New York sues Kalshi in an alleged illegal gambling operation. New York wants their cut, right? They're seeking a permanent injunction and penalties the state frames as potentially reaching about $36 billion. The CFTC is fighting state enforcement over federally registered event contracts. Yeah, big fight between the states and the Fed. CFTC going on. And the different states, they have different, states' rights. They have different laws for these prediction markets. The Federal Reserve opened comment on modernizing insider lending and mutual bank rules. Boring bank plumbing, but still relevant for how crypto adjacent banks and trusts get supervised. DeFi and RWA tokenization. Uniswap launched Earnwood Morpho. It's a gauntlet created vault so users can lend idle USDC, USDT, and Ether inside Uniswap app. Base Layer 2 volume stayed heavy on stablecoins while Coinbase disclosed sequencer revenue pressure. Usage and fee captures are not the same story. Tokenized equity, collateral, and stablecoin issuer charters remain the cleaner. RWA TradFi overlap this cut versus everything will be tokenized theater. AI and blockchain. Anthropic disclosed that Claude models compromised 3 real organizations during an internal testing after a misconfiguration exposed agents to the public mainnet. Another agent autonomy and containment scare. Well, they configured the containment wrong. So, of course, it was going to find a vulnerability and jump out of the container and do what it does. Parallel AI safety discourse spiked on agent breakout and red team failure modes. Infrastructure fights continue as multi-billion-dollar data center project nears a national park heads to a court against local blocking efforts. IBM CEO again framed quantum computing as nearly commercial revenue before decade end. Long horizon cryptography risk stays on the watch list. Not an overnight flip. So they will have to update the algos to be quantum resistant. And it looks like around 2030 is the target for that. Agentic finance rails AI agents that pay and settle keep drawing product attention even while safety headlines dominate the news cycle. Recommendations. Short term, 1 to 4 weeks. Track labeled US spot Bitcoin and Ether sessions totals daily. 31 July outflow after 30 July inflow is the live tell. Yeah, interesting. In and out every other day. Watch Brent Hormuz headlines as the Fed speaker follow through from the hike dissenters before seizing risk. Treat clarity odds and Senate calendar as binary overhang, not a time catalyst. Keep your eye on the floor, not the interviews, not the news. What's happening on the floor vote? Prioritize seed hardware hygiene after the cold card incident. Midterm, 1 to 3 months, follow stablecoin issuer licensing circle, federal plus New York path, and any peer chartered races. Map prediction market, federal versus state cases. Outcome shapes, event contract distribution nationwide. Yeah, big case for this New York. Is that Letitia James suing Kalshi? She wants that money. Watch the Uniswap earn adoption and Morpho vaults flow as read on the weather. The simple on-chain yield sticks with mainstream DEX users. Yeah. Then we need to get this space figured out. That way we can get more people coming on chain and actually using this stuff. That's why we need regulations. Let's go. Keep Stellar and related RWA payment conference outputs on the builder calendar through early autumn. Long-term, 6 to 12 months, rails and regulated dollar settlement, stablecoin trust, tokenized deposits, treasuries, agentic payments, outrank the cycle time theater. Quantum and AI security baselines become permanent due diligence items for custody and automated stacks. Multi-jurisdictional market structure, the U.S. clarity path, and also watch the EU digital euro accessibility work and the Asia payment hubs. This will define where liquidity concentrates. And we covered our risk warnings, the geopolitical energy shock from the Hormuz Iran can reprice oil. Watch the ETF flow reversals. They can cascade through bases, miners, and treasury companies leveraged to Bitcoin price. Watch regulatory fragmentation, the Senate calendar, the state gambling suits, OFAC designations, and strand products overnight. They can strand products overnight. Hardware wallet and key generation flaws are user-level catastrophic. Yes, the wallets, it's the devices, the companies that are building on top of these networks is the security vulnerabilities. The chains themselves are good to go. And I think that about does it for August the 1st, 2026. This is not financial advice. This has been your daily market intelligence report. Peace, guys.